In today's session, I'm going to share with you the second pillar in building a world-class business. Now, remember last month we spoke about your business plan. We spoke about that one-page business plan, the plan that you've created way back then, remember? The plan that you're looking at every week, that you putting in front of yourself regularly, so that it can inspire you and keep you on track. Now, the pillars that we're going to be working on moving forward will feed into your business plan. So as we're going through these 12 pillars of building a world-class business, I want you to go back to that business plan regularly. I want you to go and adjust the business plan and change the business plan and tweak the business plan as we learn and as we grow new things, and also, of course, as we grow in our world-class business. I want you to, in thinking about today's business, I want you to always remember one thing. In fact, in everything you do in your business, I want you to remember this one thing. Guys, we have to build an asset of value. When you start a business, when you purchase a business, when you go into business, I want you to always remember that you're building an asset of value. In other words, you're wanting to build something that you can sell. You're wanting to build an asset that one day you can say to yourself, this business, this thing that I built has value, and I can sell this thing. I can sell this asset and I can get a whole lot of money for that. So you want to build this thing right. You want to focus on doing things right from the beginning so that your asset has value enough to be able to sell one day. Now, that doesn't mean you're going to sell your business. I mean, in some businesses, you might be able to keep forever. In fact, you might even never have to retire. You could be a business owner and have a business that's running itself, or you just pop in every now and then, and visit the business, but you can still earn an income. You can still own the business and earn dividends off that business forever until you die one day. And in fact, that business then needs to be transferred to your next generation. So think about a legacy that you're wanting to leave when you're building your business. So coming back to today's lesson. Today's lesson is all about your financial plan. So when we are building a business, building an asset of value, it's important that you also understand how the money works in your business. And money, of course, is what your business is there for, to be able to make money so that you can use that money to grow an asset, to build an asset, or even use the money to purchase assets. That's a whole different story. But you need to have a financial plan. You need to understand where the money is, where the money is coming from, and how much of that money you get to keep and reinvest in your asset of value. Now, that was a very difficult thing for me in all the years of owning a business, was understanding the money, understanding where the money is, being able to keep my eye on the ball, being able to know exactly what's going on in my business, or to have a scoreboard to be able to know when I look at my finances, to be able to know whether I'm winning this game or whether I'm losing the game. Now, you don't have to be an auditor. You don't have to be an accountant or bookkeeper or anything to understand the finances in your business. But you do need to have the basics in place. You do need to know, there's a couple of things that you need to know. First of all, you need to be able to understand how much money comes into my business, how much money goes out of my business, and how much is left over at the end of the day. In other words, your profits. So your income, your expenses, and your profits at the end of the day. Your profits are what left over after you've paid all your expenses. So you need to understand that. You need to understand how much you need to bring in every month to be able to cover all your expenses. And when I say all your expenses, I'm talking about your salary as well. So many times we work with businesses where the owner of the business starts the business up and never really gets to earn a market-related salary. He pays himself most of the times in the smaller businesses. In your medium-sized businesses, they kind of get it right because there's systems and structures in place, and turnover is generally pretty high. And you don't get to be a medium-sized business if you're not making profit. But in the smaller businesses, the business owner doesn't even earn a market-related salary. So when I say know the numbers and know what your expenses are, your market-related salary is part of those expenses. It's an expense to your business. So when we're looking at a financial plan, and when you're putting down your financial plan for your business, you need to understand your income and expenses. You need to also understand that, go and speak to a bookkeeper. We bring bookkeepers on, and we partner with bookkeepers that we introduce to our clients so that the bookkeeper or the auditors can explain to the clients exactly how the financial statements work, how your balance sheet works, your income and expenses, your profit and loss, and all those kind of stuff. We bring experts in to work with our clients so that our clients understand the money thing, so that when you as a business owner, no matter how big your business or how small your business is, when you look at your financials, which you actually should be looking at every single month, not only once a year when your figures get audited, but you need to have your eye on the ball. You need to be looking at that scoreboard every month. And you need to know what's going on. You need to be able to see what the trends are. You need to be able to understand whether you're going forward, whether you're winning the game or whether you're losing the game, because that will help you adjust along the way. I remember one of the businesses that I was running. It was a franchise. It was one of the cellular phone company franchises that we were running, and we were doing really, really well in the beginning. We had very little competition. It was way back in the beginning of mobile phones in South Africa. We were doing really, really well. Turnover was great. We were earning good money, and the business was growing. So 2, 3, 4 years down the line, every month the turnover would be going up. But I was making less money. And by the third or the fourth year, I was looking at my business and saying to myself, but are we doing so well? We're doing, like, our turnover is 4, 5 times what it was last year, but the profits are less. I'm making less money. I'm not able to cover the expenses. But I didn't understand how to read the numbers in my business. I didn't understand how to work out or determine whether I was making a profit or a loss. I was just looking at the income, at the total income, at the turnover. In other words, all of the money coming in. But I wasn't balancing out the expenses. And when I went and checked, even though our income was going up, our expenses were going up as well. In fact, and when I say expenses, I don't mean running expenses like rent and that, although that was going up a little bit. I'm talking about the expense of our products that we were selling. So our margins, our profit margin was shrinking. So in the beginning of the business, we were making upwards of 30% profit margins. In fact, in some items, we were making 60 and 70% margins. In other words, profit out of our stock that we were selling. But as the prices went up and as competition became stiff, the margins shrunk. And in some instances, the margins shrunk to like 5 to 3%. So even though the turnover was going up, the money was coming in, our expenses were so high and our profit margins were so small that we weren't covering our fixed expenses, our monthly expenses that we had to pay, salaries, rent, electricity, those kind of things. And so I had to sit and figure out how these things work. I went and learned how to read financial statements. In fact, it happened when we changed auditors. We got a new set of auditors in, and these auditors sat with me and they explained it to me. They didn't just share the figures and say, wow, your turnover is growing, your business is growing. But they sat and they showed me where we could cut expenses, where we could rein in some things, where we were spending unnecessary. They helped me do certain things. I started learning the aspects of business coaching. In fact, that's where I started studying to become a business coach. And I learned how to assess the products and categorize the products and look at margins and look at all those kind of things to be able to see how we can increase profits within our business. So guys, your financial plan is really, really important. I want you to go and sit and look at your business. And I want you to go and write out a financial plan for yourself. And what you want in that plan is you want to understand where your break even is. In other words, how much do I need to bring in income to be able to cover my expenses based on the margins, based on the profit that I'm making. So where's my break even? So all my expenses are paid. Then I want you to look at a market related salary. Am I earning a market related salary as a business owner? Then I want you to look at a return on your investment. So whatever it cost you to put this business into place, whatever you had to borrow or invest to start your business, you need to look at recouping that income. You need to look at a return on your investment. How am I going to get a return on what I've invested in the business? And it doesn't necessarily only have to be money. It could be time. It could be any of those things. So a return on my investment. How am I going to get money out of my business again? How am I building this business as an asset of value and growing this asset? Or I'm pulling money out so that I can grow other assets. I want you to think about a short-term goal. So if your business is not profitable at the moment, or if you're just starting a business, or if you're new to this thing, you want to have a short-term goal. As quickly as possible, you want to get your business to be cash flow positive. In other words, to be able to make a profit. That's a short-term goal. Your medium-term goal would be to look at a return on your investment. When am I going to start to get a return on the investment that I'm putting in, building an asset? And then a long-term goal or a longer-term goal, which is building an asset of value and an exit strategy. So if I retire one day, how much do I need to have so that I can retire comfortably? How much will I need to either take out of the business and invest in other assets, or can I grow this business to become that asset of value? So a financial plan is really a short-term, medium, and a long-term plan in terms of finance. And when you start playing around with your financial plan, you want to look at stuff like reinvesting, like growing your business. What's the next level? Am I going to expand? Is it even worth expanding? So there's a whole lot of numbers you need to look at, and we can help you with that as business coaches. We can certainly sit and bounce some ideas off you. But what we definitely do suggest is that you bring in an expert, a financial expert, to also sit with you and help you with that as your business grows and you move into that next level. You don't have to bring them in right in the beginning. You can work with your coach until you get to that stage. But once your business is starting to reach a certain level, you really want to have that financial planning conversation with an expert. So the challenge for this month, in this month's pillar, the financial plan, is that you go and draft a financial plan. A short-term, a medium-term, and a long-term plan. Where are you right now? Are you earning a market-related salary? Are you getting a return on your investment? And what's your exit strategy? I look forward to seeing you again next month as we tackle the next pillar of building your world-class business.